Here's a question for you. Have you ever checked your bank account? Wait, how did I lose $47 this month? No, you didn't forget to pay a bill. You didn't splurge on a coffee. And you definitely didn't buy anything wild on Amazon at 3 a.m. Yet somehow your money is vanishing, slowly, silently. And the worst part, most of us don't even notice it until it's too late. Here's the thing. Banks and financial companies are basically charging you tiny fees that sneak past your attention like ninjas. $5 here, $10 there, $20 somewhere else. And over time, those small charges add up to hundreds, maybe even thousands of dollars a year. If you think this isn't happening to you, well, statistically, you're probably wrong. According to a 2023 NerdWallet study, the average American spends over $300 per year on bank fees alone, and that's conservative. So today, we're gonna break down the 7 invisible fees slowly draining your account, and I'm gonna show you exactly how to stop them before another penny disappears. Welcome to Causal Growth, where I spend way too much time thinking. If you're someone who checks their account every week and still wonders why there's barely anything left, and this is for you. Number 1, the maintenance fee you never read. Here's what most people don't realize. The monthly maintenance fee is not just a random charge. Banks are betting you won't notice because, well, most people don't. For example, a typical checking account charges $12 per month if your balance drops below a certain amount. That's $144 per year just for having money in your own account. Now, you might be thinking, 144 isn't that bad. Here's where it gets really interesting. If you invested that $144 every year in the stock market over 20 years with an average return of 7%, that small fee is actually costing you over $5,900 potential growth. So it's not just a fee, it's lost opportunity. And psychologically, we tend to ignore small losses. We tell ourselves, it's only 12s, I'll just let it slide. That's exactly what they're counting on. Actionable step, look for no maintenance fee accounts. Online banks usually have them, and many traditional banks will waive fees if you set up direct deposit. Number 2, ATM surprises. The classic, I just needed $20 from the ATM trap. Your bank charges $3. The ATM owner charges $2.50 total. $5 for $20. That's 27.5% gone before you even get your cash. And most people think, it's fine, I won't do this often. But let's say you take out cash twice a week. That's $572 a year. Psychologically, this is sneaky because it's a one-time transaction. So it doesn't feel like a recurring fee, but it is. And over a decade, $5,720 gone. Actionable step, use your bank's ATMs or switch to a bank with fee reimbursements. Carry a debit card instead of cash when possible. Number 3, the overdraft trap. This is where emotions meet finance. Because overdraft fees are designed to punish panic. Here's what happens. You spend $45, but you only have $40 in your account. Boom, bank charges $35. That's almost a 90% fee on the transaction. According to the Consumer Financial Protection Bureau, Americans once paid over $15 billion in overdraft and NSF fees in 2019. And here's the psychological trick. Most people feel embarrassed and try to cover it quickly, which leads to more overdrafts. It's a cycle. Actionable step, set up alerts for low balances or link a savings account as backup. Some banks also allow free overdraft protection if you opt in. Number 4, hidden credit card fees. Here's what most people don't realize. Your credit card isn't free. Even if you pay on time, there are fees lurking. For example, foreign transaction fees, usually 3% per purchase. Going on vacation and spending $2,000. That's $60 gone instantly. Late fees are even worse, $30, $40 per missed payment. And if you carry a balance, interest compounds $1,000 at 20% APR, that's $200 in interest in 1 year. Psychologically, we ignore small percentages because they feel small, but in reality, they're quietly draining your cash. Actionable step, use cards with no foreign transaction fees, set up autopay. Number 5, service fees you don't need. Banks and financial services often charge service fees that sound harmless. Check printing, paper statements, wire transfers, account inactivity. Example, a $10 check printing fee once per year. Doesn't seem like much, but a wire transfer? That could be $30, $50. Do that twice a month? That's $1,000 per year in avoidable fees. Here's the psychology. These fees are small enough that we dismiss them as part of life, but they add up silently. Actionable step, go digital. Stop ordering paper statements. Use ACH transfers instead of wires whenever possible. Number 6, subscription traps linked to bank accounts. We all have free trials that turn into $9.99 or $14.99 monthly subscriptions. Now, here's the kicker. According to a 2022 Bankrate study, 15% of Americans are paying for subscriptions they don't even remember signing up for. Do the math. 15 month, you have 180 year. Over 5 years, $900. That's almost an entire vacation gone just because you forgot to cancel Netflix, Hulu, or a free fitness app. Psychologically, subscription fatigue works because we don't feel the money leaving our account. It's automatic, and our brains rationalize, it's only $15, I'll use it eventually. Actionable step, audit your subscriptions every month. Use apps that track recurring payments. Cancel anything you don't actively use. 7. Hidden interest on loans. Finally, the big one most people ignore. Loans. You think a $500 personal loan at 10% interest is harmless, but if the repayment schedule is long, interest compounds quickly. Example, $500 loan over 3 years at 10% interest, carry $162 in interest. $500 over 5 years, $300 at $5. Multiply that across car loans, student loans, or credit cards. Suddenly, the invisible fees are real money you'll never see again. Psychologically, our brains underestimate slow-moving costs. We focus on monthly payments and ignore the total interest. That's why so many people end up paying twice as much as the amount they borrowed. Actionable step, always calculate total interest before borrowing. Pay off high interest debt first. Consider refinancing if possible. Look, here's the reality. These 7 invisible fees are sneaky, but they're also avoidable. You don't have to be a finance genius to stop them. You just need awareness and action. Think about it this way. If you avoid just $300 in bank fees per year, invest that instead and let it grow at 7% for 20 years. You're looking at over $12,000 in future wealth. That's the power of catching the invisible. So here's your next move. Audit your bank account for hidden fees this week. Set up alerts and use digital tools to avoid overdrafts and subscription traps. Start thinking about opportunity cost. Every small fee is really a loss in potential growth. If this video helped you finally see the fees lurking in your accounts, hit that like button, subscribe, and turn on notifications. Remember, awareness is wealth. Action multiplies it. Start small, stay consistent, and you'll be amazed at how much of your money you can reclaim.